Burgess and Bolton's weekly wrap-up.
Hello, Ben.
Hello, Jeremy. Happy Friday.
Happy Friday-ish, almost. A little bit of a pre-record.
Well, it's we're actually in a really strange time zone at the moment, aren't we? Because we're the leap year day.
Yes. I've forgotten all of that.
Yes. So this day only happens once every 4 years.
Yeah. And here we are. That's the real reason we're recording it on this day, because it's so special.
And we can divide our ages by 4.
Oh, good. Hello, everybody, and welcome to this week's edition of Burgess and Bolton's weekly wrap-up, where we look at everything to do with the London market, technology, change, innovation. This week, we're going to talk quite a bit about brand and marketing and data. But to start off with, as always, Ben, let's kick off with the news. You saw this quite interesting article, which builds a bit on our conversation last week about mergers and acquisitions, but also how organizations are positioning themselves for different markets. And this is AXA going into the kind of smaller business.
Yeah, I think we've had a period, I think, post-COVID. Well, COVID was kind of quiet in terms of M&A, really. And what was a consolidating market prior to that has sort of slowed or almost reversed, really, with like quite a lot of new players, which we'll talk about later in the show. But what I think we're seeing now, and we have talked about this previously, we've seen several mergers now in the UK regional market, and I think what we're starting to see now is a building M&A trend or consolidation trend, which is driven by businesses' strategies, obviously, and what they're trying to achieve and what they're trying to do. And it's happening, if you look at it right across the piece, it's happening both personal lines, mid-size commercial business, and it's not yet quite happening in the kind of core specialty P&C markets. But of course, it's only a matter of time that could happen. And but this is an interesting one. So this is another kind of statement of intent in the UK commercial kind of SME market. They define it as businesses that are less than 1,000 employees. So there's quite some of them. That means some of them are quite big in some ways. They're big, medium-sized corporates, mid-corporates.
Yeah.
And they're saying it's not a revolution, but we are definitely going to be pushing forward for growth in these areas with more specialty products and so on and so forth, as well as your standard property type things. So AXA is very much focused on this, saying that they believe that, based on the fact they believe rates will go up in this area for these businesses and that it will be profitable for them. Now that's kind of interesting, but it's also interesting that, I know, obviously I work in this market, there is a lot of other players who have grown quite recently into this market and are growing into this market who are also competing for this business. So there is quite, intense competition, I guess, from the carriers here. And I think, perhaps we'll start to see also the brokers with more consolidation as well. So, I just think it's the start of a fairly probably intensive period of, consolidation, M&A, repositioning, books of business moving around, and quite an interesting time, really.
Yeah, definitely. I saw this story in The Guardian, which a rejection of a takeover bid. But again, it kind of just adds to your argument that we're going to see kind of this consolidation across the board. This is more kind of personal lines, but I think you're probably right. I think we are going to see that as organizations.
Yeah. It's a funny story, this, because they keep calling it the Belgian rival. I don't think it really matters that it's Belgian.
No.
That's just a journalist writing it. I mean, Ageas is a pretty well-known insurer in the UK in the commercial market. I'm sorry, it was commercial. It dropped its. So this is one that where Ageas, I think, has dropped its. If I remember rightly, get this right, it's dropped its commercial book and it's moved into personal lines. And Direct Line dropped its commercial book. I think sold it to RSA, and it's now very much personal lines. So of course, almost as soon as they've done that, then Ageas has said, "Brilliant, we need organic growth. Oh, sorry, we need to acquire to grow in this market." So they've gone for Direct Line, and of course, the first thing is to reject that. Perhaps because, as we were saying, Adam Wimso, who was at Aviva, has only just joined about 3 weeks ago. So maybe he wants a bit more of a run before he gets his payout. But it could be shortest lived CEO role, that one, for a while. But yeah, so it's all the same thing, really. I mean, I think even if people listening to this are not involved in that particular part of the market, I think it's well worth being aware that once this stuff starts, it gets a sort of certain momentum.
Yeah, definitely. Good. I'm sure we'll be coming back to M&A Watch throughout the year. So, Ben, I came along, or you very kindly invited me to your Insure Index event on Tuesday, which I thought was really good. Very insightful talks. I know I couldn't stay to the end, but certainly the ones that I saw were great, really, really, really good. So we're just going to spend a bit of time just kind of recapping for those who weren't there, kind of what the event was all about. Actually, perhaps if we start with that, I'll ask you, Ben, just to give us a quick overview.
Yeah. So just Insure Index is basically a sister business to Grace Church and to a company called Brandex, and it's standalone, but it is about it's set up as really a publishing channel to sort of showcase, if you like, the good news, but data driven about commercial insurers. So we do brand league tables showing who the leading players are, and we do there's a lot of other stuff that appears on there, and there will be more and more stuff in future, really around what is called sort of third party collateral or proof, of doing something well. And because it sits on there, it has a greater feel of independence and objectivity, and we curate that, and Grace Church provides, it runs as a standalone business, but Grace Church provides data in. It's partly as it's called, powered by Grace Church, but there is other data in there as well. So we have companies, you're a partner, so content from the insurance network will go in there. We've got Slipcase as a partner, associate partner. We've got a company called ICMR that does financial data. So we're starting to build up a real kind of network around people who have content and data and so on, and that can be used in different ways. And the core business is really the insurance entities themselves. And I mean, that could be a broker or a tech company or an insurer or an MGA, whatever. So they are partners, and we help them through that to sort of showcase what their brands are and what they stand for. And it's all data. It's all underpinned by data. And with the idea, of course, that they can kind of use that and point people at it. And that there is there is a benefit, say, for example, for a tech company to be seen alongside the insurers, with the similar sorts of measures or data that show how good they are. So that's kind of what Insure Index is. So every year the flagship ranking is the London Insurers Brand Index, which is comes out of Grace Church data, and it's a fairly classic measure of brand power, sort of share of mind. So the awareness, if you like, of these brands and the actual share of business that they have through the surveys that we do, and we combine that with a few other metrics to create a sort of a table of players, the top 20. So that was what this event was ostensibly about. We'd also done a lot of work this year on what drives brands, what's the data showing, and how does it work when you're thinking about marketing, and where should you spend your money, where should you invest it, and how, and what should your aims be. So we presented a lot of that on the night, and we got, I think as you alluded to, we got a lot of engagement. We had a lot of
Yeah.
Nearly 40 people in the room, I think 35, 40 people, and a lot of people who we've actually got to do another event because lots of people said they wanted to come because they couldn't get there, and they want to see this evidence. So it's good. Yeah.
I always like it when you hold it in a nuclear bunker as well. I think it just adds that extra sense of security.
It seems like we've kind of, this has become our shtick. You know, we were in another kind of deep bunker last year, so that was a bit small, so we've just gone to a slightly bigger deep bunker. And it was a day, of course, when there were a lot of protests. So there was some of the clients who came were
sheltering,
asking us. Well, they were asking us if we had security arranged for the venue, and I said, I think you'll be fine, but you know, anyway, it went off without a hitch, and it was good. Yeah, it was interesting.
Yeah, it was really good. So so let's recap on some of the themes that were covered. So I think let's start with the kind of the challenges side. I think this is great.
So it's just, I mean, these are just a few things that we were looking at. There's plenty of other stuff that we did talk about, and there's plenty of other stuff behind that, but I just wanted to pull out a few for today. I mean, I think one of the interesting things that we looked at as part of putting the presentation together here was what's happening between, if you like, new brands, challengers, and the established brands. And it turns out that is actually quite interesting. So from about 2019, there have been several players, some of whom are mentioned down there, and perhaps one of the most prominent, maybe Convex, possibly, well, you know, some of the others I think as well, Arch, Fidelis, Mosaic, Inigo. You can argue a little bit about the definitions, but they are all pretty new, and they were, in terms of our data, just not in existence prior to 2019. So I kind of don't care about the argument of, oh, it might be a revamped organization. They weren't really present as such in any competitive manner, you know, in any meaningful competitive way. So when we looked at this, what we found was that from 2019, the incumbents dropped quite significantly, about 10%. And at the same time, interestingly, almost mirroring it, the rise of the challengers, you know, actually slightly more than that, but almost, well, more than a 20% shift away from incumbents towards challengers. And this is a chart about where brokers would say they place good quality business. So if that works out and pans out, and I think the usage data would suggest that is happening, then these new players are taking a lot of business away.
Oh, we've lost Ben. Oh, Ben, we just lost you for a minute. So yeah, carry on.
Oh, okay. Yeah. Sorry. So yeah. So this shows that, as I was saying, a pretty big shift, 20 points. So this is potentially real business. So some of it is to do with remediation, of course, because some of the big players pulled out classes and stopped writing the business in certain areas. And of course, that naturally happens in markets, you know, where there have been losses. But this is a bigger shift than that. And I think it is also, we made the point that nearly all of these players, nearly all of them, I wouldn't say all of them, have been quite explicit about saying they are trying to develop a brand of some kind or other. And they are investing in that as being important. So they're there for the long term. They want to build presence as well as just sell you know, their products. So there's more to it than that. And collectively, they are being pretty successful. I think when I presented this, there was quite a bit of, there was quite a bit of sort of, you know, people leaning into this in the room, you know, whether they be incumbents or challengers, because I think this is, you know, kind of quite a wake-up call for brands, really, because we also, Julian Steedman, who was there, also showed a chart that showed just how much the market churns and changes over the years in terms of the brands. So we might be going through another of those changes.
Yeah. So it's quite interesting just picking up on our first bit about, you know, our prediction of increased consolidation. And this could be because there are kind of more challenges out there now to be consolidated, I suppose, and especially if they're making headway, in these types of charts around brand and performance.
Yeah, I mean, the initial effect of more players is that you get a sort of shift away from consolidation. But I think your point's well made, is that ultimately, though, what do these businesses want to do, and do they get swallowed up by larger players? So ultimately, is there a small fish eats a smaller fish, and so on, like that analogy, is that eventually the big fish just eats the whole lot. And so I'm not so sure which way the consolidation, if and when it happens, will go, whether it will be just a massive kind of thing at the top, where two massive players come together, as we've had in the past, or whether there's just more acquisition of these newish players who get bought out as rates fall off or whatever. So it's you can never really tell what will happen. I think at the moment it's quite hard to see that there will be organic growth, and I've spoken to people about this. That's what's quite tough for the big players. It's hard because some of the classes of business don't give the returns they need. It's hard because they're still struggling with legacy systems and cost and all that stuff. And the pie isn't growing that much bigger. So inevitably in this market, it pushes you towards saying someone's going to buy someone else and try and create some economies of scale.
Yeah. So that brings us on to kind of the leading brands. Slide, which is always an interesting when you first put it up to see the reaction in the room. It's always good. But
well,
Beasley,
it is about competition ultimately, and there's no point sort of shying away from the fact that these businesses, these marketing people, indeed, are wanting to win and get their brand to the top of the tree. These are the top 10. Beasley came out top, and Beasley has been advertising early on in 23, had a fairly big campaign. There was quite a few people commenting on their huge event at Canary Wharf with drones flying over the Thames and all that sort of stuff. But they've been spending some money, right? So it seems to have worked. And then you've got a sort of interesting mix here of new and old. So Convex, obviously only 5 years in, 4 years in, really now up to 4 billion, and its brand is coming through strongly. And to be fair to that business, they haven't done much of what we call in marketing above the line advertising. They haven't really had to go out and spend some cash on the railway station type stuff, or the TV, or whatever else they're going to do, or the big sports sponsorship. So that could come. And, you've got then much more established brands like Chubb has come up a lot. I mean, Chubb is a really strong brand, and it's heavily invested, and it's consistently invested around the world. So it has a huge amount of sort of heritage and strength as a brand. And to an extent, as does AIG. And they seem to also be coming up quite strongly in a market where typically they haven't made a lot of kind of noise in marketing and relationship building in London.
Is it worth just talking about how that is? So I think it might be worth just talking a bit about how you kind of rank these. What are the metrics? Because I think it's, well, you can tell me, but it's about recall, but it's also around some other stuff as well, isn't it?
Two main measures. So market share, we measure that by usage, about where brokers have said and who they've said they've placed business with over the last 6 months. So we aggregate that up in percentages, and actually that correlates pretty closely with GWP. So scale and size is one part of the measure, and the other is awareness. So spontaneous awareness, which brands are you aware of? So we effectively mix those two. There's a bit of weighting and stuff, but it basically means that what we're representing is the scale and size of an organization, its footprint, if you like, in the market, which is important. You can't get away from that, and you can't ignore it. And also, though, it's how hard its brand is working. So what you can have is a very big organization where the awareness is actually not so high. Ideally, you want a very big organization where the awareness is very high, so that the brand is, you're big and the brand is working very strongly for you. I mean, in the regional market, I mean, in composites, for example, they have got huge awareness and market share, and they're known among all brokers, not just the ones that deal with it. I know they deal with most of them anyway, but you can look right across the demographics of the brokers, and their brands are known in every single part. So that gives them so much choice as to where, they play, as it were.
Yeah.
Whereas when you get into London, even some of these players here, they're known to a proportion of the brokers, but lots of brokers aren't mentioning even some of the quite well-known brands. So there's a lot further to go, I think, with brands in London. It's almost, in branding terms, too specialized. There's too much targeted marketing and so on through classes. So so that's one of the messages we were putting out really about it.
Really interesting, great event, and I think everyone enjoyed it and stayed, which is always a great sign.
There was lots of discussions after. I mean, really lots of really interesting discussions. And I think it was, I think the gratifying thing was the intention was to say to marketing people, we've got some measures that really do stack up against, some of the classic stuff, the sort of methodological stuff, latest thinking that's out there in the world at large. We've said there's a huge upsurge in B2B marketing at the moment. And actually, I was on a phone to a top marketer. So, I was on the phone to a US leading marketeer who said that, and he works right across all sectors. He said the insurance sector is one of the most interesting sectors in terms of advertising at the moment, because there's a lot going on. And he said if you compare it to a very big advertising sector or industrial sector like the car market, he said that's terribly dull and boring, but the insurance stuff is really kicking off in terms of advertising. So I think we'll maybe have a look at that next time, because that should come here.
I think from kind of the space that I operate in as well, kind of more tech operations and data, I think what's interesting now is that we're in the conversations that we're having where technology and data is there to enable employees to do their jobs better. That plays really neatly into an effective, delivering on your promise, your brand, essentially.
Yeah.
So you've got all these things coming together, which is really interesting, and your data being able to capture that and monitor that, I think is really helpful for everyone, not just marketeers, actually.
Well, it is. And actually the thing really, I guess, in the marketing world, the challenge always is to convince the finance director to spend some money on this rather than on kind of immediate sales or immediate returns. And that has been a significant aim, I think, of all the people with the data, is to say, look, long-term brands build massive growth. You can see that with the big brands in the world. But when it comes to, the finance people running these businesses, they often just don't get that, and other competing interests come in and they don't really. So that's very much the case in the London market, really, which is people, they're getting decent investment, in tactical advertising and marketing, but very much harder to say to a bunch of finance people, ex-underwriters, to say, look, we're starting this build now, and in 3 to 5 years it will start to show a return. They don't think like that. They're very short term. Yeah.
So let's just build on that a bit, because what you also noticed, or what we also talked at the event about, was kind of brands coming together and kind of coexisting to kind of make really powerful propositions to customers. And we talked about this one, which is the Marsh white space coming together, two brands there. And yeah, I mean, it's an example, but it's just really interesting anyway about what's happening kind of in this digital trading environment, I suppose.
Yeah, I mean, look, we had Verisk were there, and they said a few things about what they were trying to do and about brand and where it played, which is very important to them. What I think is interesting here, so obviously Marsh has made an announcement to say we will be rolling out Whitespace onto our whole London platform and UK, and who knows more, they might go further than that. But what you get, and I think this is going to be true in capital markets as well, is these tech brands, if you like, become sort of very much part of the ecosystem, and they're embedded because they're on systems, on screens, and the administrative stuff that gets done around trading. So they're constantly seen. So the point about awareness is that it doesn't really matter how you do it, but this is one way to do it. It becomes a multiplier effect. So who benefits? Well, it's always a little bit tricky to say, but I think Whitespace here will be a major beneficiary of this, because Marsh has effectively given a brand platform for all of its brokers in the UK and London. I don't know how many that is, but it's a lot. And they're going to be trading daily with this. So, like Intel or something like that, it's going to become the thing, and it's not PPL. So once that shift has happened, it's quite hard to go back and say, well, we'll use the brand that we didn't use. We'll use the old toothpaste or whatever analogy in the consumer market. You tend not to do it, and it's also a bit about the shiny new thing. That's the cool brand to have. Humans then go, well, they're using what? Yeah, we're using Whitespace. Yeah, we're on that platform too. And it's tools of the trade, and it's all that. So I think branding wise, this is about, and then more widely, I think just in terms of any type of tech business now that is going to be embedded alongside these brands. That co-branding, needs to be managed carefully, but it can be hugely fruitful. And I think it is already operating. I mean, people like Actress and people like that, are quite big brands, big players. But I just coming back to Whitespace, I think Whitespace is interesting because it has sort of gone out on a, more user-friendly type of message, not it's a bit techie, but it's not so techie. It's not like about the wiring diagram. It's about, this is useful to you guys. It's going to help you do more business as an enabler, digital first and all that stuff they talk about. So certainly we felt it was the battle between PPL and Whitespace, if it is a battle, was kind of, which it is, I suppose, is almost like the old Apple and Apple, Mac and Microsoft PC advertising in the past. You only the cool guys have the Apple. Yeah. And the Microsoft thing crashes all the time and things like that. So, that there's nothing new in the world. And I think that's kind of interesting. Yeah, it is interesting. I think it'll be really interesting to see how that pans out. Because, just thinking about the branding and messaging, if you look at what PPL put out, they go, well, it's always about the numbers and how many people and the number of transactions, and whereas what you're talking about is the user interface, what it's like to use this system, and how agile it is. It's a completely different message, isn't it? It's a bit of an Avis we try harder. Avis Hertz. So Hertz was the biggest one in the world, and Avis was quite a way off. But it had this fantastic advertising campaign which simply said, we try harder, i.e. we try harder than Hertz. And it just got, and they marketed it, and then that stuck, right? And then it became, well, we'll go with the one that's we try harder, so there's great debates about all of this, but this is going to come into our market. So these also, you can see there's a Marsh as a symbol, an icon, an asset, if you like, and Whitespace is an asset with Verisk also there. So there's a lot going on in that branding, those assets. Now, assets can be all sorts of things, your brand assets, physical or, or digital or whatever. But in a digital world, you've got to say that, wow, sitting on a screen in every trading floor in London, that means you've got sort of fantastic kind of brand assets going on. and probably on iPads and phones when they're on the train. I mean, so it's I guess they've all come from a tech background and not thought about most of this stuff, but it's happening anyway.
Yeah. Really good. Thanks for that, Ben. So actually, on the way to your event, because I came into London in the afternoon, I went to park my car in the station, and I noticed that I could not get a space on that car park, and that said to me that people are back in town in a big way. And I think you had a conversation as well.
I did.
Backed up my prediction.
Who I spoke to must, for the time being, remain confidential. But a person who knows about, without doubt, is one of the leading people in the property market in London, said that there is essentially little or no office space left in EC3 for anybody to move into at the moment. And that has never been the case in the whole of his career.
That's incredible.
And he's
Incredible.
79. No, he's not quite anything there, but he's not young. He's no spring chicken.
That is really interesting. I think what I'd really like to know is, are those offices being who's taking that office space? I think that would be really interesting. Yeah,
it's mainly insurers. I mean, it's mainly insurers, and the conclusion, I think, is that they're all bringing people coming back into the office big time, and they know there's going to be more and more of that. So it's going to be back to 2018. Yeah,
and look, and I said this is the reason for my prediction, is because I just said it was really
losing you, Jeremy.
Oh, really?
Yeah, I'm losing you. I can't hear what you're saying.
Oh, yes.
Go on.
The reason I said this, my prediction, is very much around the branding chat that we've just been having, because if the brand fulfillment or proposition to a customer is only as good as the people you have working with you and the culture you try and drive within your business. And I just think that is really, really difficult to do. Not impossible, but really difficult to do if you're working remotely all the time. And we'll see. But I think that is, I still think that's true. So
yeah. Well, look, it's all good. I mean, it's all very lively and it's positive, and we haven't had that for a few years, so you can't complain about it, can you? I mean,
nope. And we are not. Good.
The Burgess coffee shop will be opening in Leadenhall Market.
Yeah.
Shortly, to capitalise on this influx of people.
If I was going to have, I thought I'd lost you again.
I'm here.
Oh, you keep going. I was saying that if I was going to open some kind of pop-up coffee shop or something like that, I think I'd have an ice cream van that also sold pancakes. I think that would be a winner.
Okay. Yeah. Mm-hmm.
Yeah.
Well, you pivot. That's a pivot.
That is a pivot. I'd have two windows: ice creams on one side and pancakes on the other.
Yeah.
My reasoning is that you could have your pancake and you could have bananas and ice cream, but you could also have the other window. You could have just your cornet. There you go. It's just another business idea that I've got.
Yeah, that's a good one. Yeah, I think that might work. I think almost anything's going to work now, though. You just have to. Yeah. There's all those people coming in, so
that's it.
Who knows?
Good. Who knows, indeed. Okay, good. Right, what are you doing this weekend, Ben? I'll tell you what, I'm going to go first because I'm going to tread on your toes because I am going rock climbing this weekend.
Oh, really?
Yeah.
Wow. Where are you going?
I'm going to Dartmouth, I think.
Okay, that's a nice part of the world.
Yeah, we're going canoeing and then on the Sunday we're going rock climbing and abseiling.
Right. Okay. Cool. Yes. I've actually will do a little bit of rock climbing, I think, this weekend, but not that much. But it's been a busy week. I think I'm going to have a relaxing weekend. That's my plan. Yeah,
it's been a busy week. We've been moving office, hence the new office. And we do it, of course, the tin style. So we don't employ people to do it. We just hire a van and do it ourselves.
Yeah, quite right. Yeah. Yeah.
Oh God, it's hilarious because you think, oh, this will only take an hour, and 6 hours later, 40 van loads. You're just going, oh my God, how much
I know.
crap have we got?
It's amazing. Yeah.
It is. Okay, right. Thanks for tuning in, everybody. We will see you next Friday. Have a good weekend.
Have a good one.